It's time for Real Ag Radio on Rural Radio Channel 147 on Sirius XM. Real Ag Radio and RealAgriculture.com is your home for insight and analysis of the issues that are impacting your farm business. Let's get real and get connected with Real Ag Radio. Welcome to Real Ag Radio here on Rural Radio 147, Sirius XM. Sean Haney, your host here on this Tuesday edition of the show. Hey, thanks so much for making Real Ag Radio and Rural Radio 147 a big part of your workday, and a big shout out as well to everybody listening out there on the Real Ag Radio podcast. You know, I don't care how you listen to the show, but just tell your friends, tell your family, tell your neighbors, anybody interested in agriculture, all about Real Ag Radio and RealAgriculture.com. Today on the show, we're going to try to understand, we're going to scratch our heads a little bit and try to understand the headlines driving the market right now. And I know on, maybe some of you, it's still 22 crop, but for a lot of you, it's trying to sort out your 23 crop marketing. And I like to, on a weekly basis, talk to a market analyst to try to better understand. Today was a little bit nicer in the markets than it was yesterday, but still kind of a mixed trade for sure. We're going to talk to Chip Flory. He is host of AgriTalk, good friend, and I appear every Friday on AgriTalk that you can hear right here on Rural Radio 147 at 2 o'clock Eastern. But Chip's a good friend, and we're going to have him break down what he's seeing in this market, as he is very, very experienced in those places. As well, he also talks to a lot of market analysts himself. He'll try to make some sense of what's happening. We're also going to talk today to David Coletto. Now, a bit of a different topic here from David Coletto, CEO of Abacus Data. We're going to learn a little bit about union membership. And we're seeing a lot of strikes and labor impasses right now coming out of the pandemic. And it has an impact on agriculture, right? We rely on like industries like railways and shippers and ports. They have unions, and we rely on them. And what is causing some of this impasse at a time where really, we need them to be moving goods, and there's a problem. So David has some insight from some of his research in doing market research in the area of unions to try to better understand here what exactly is at play. We'll also have time today for the top ag news stories of the day. If you have any feedback on today's show, you can send me an email, shaney@realagriculture.com. You can also find us across all the different social media platforms. You can also call the Real Ag feedback line, 855-776-6147. Last week, we covered the cabinet shuffle quite a bit, and I wrote an opinion column, what I think is the signal, the message being sent by Lawrence MacAulay being, I guess, getting a second opportunity as the Minister of Agriculture and Agri-Food. I think there's a clear message there from the government. Brian, longtime listener of Real Ag Radio and a fan of RealAgriculture.com, sends me an email and he says, It's been decades since the ag portfolio held any real clout in Ottawa. As far back as the Chrétien era, it was obvious to some of us that ag was just a little bug that bothered the upper levels in Ottawa from time to time, and I am sure they have thought seriously about dropping the ag portfolio altogether. And they would have done it except for the international needs that groups like CFIA look after, etc. Don't be surprised if in the near future they consider rolling ag into the environment portfolio. Wow. That would be something. Brian makes a pretty, now to be fair to Brian, that would be a big shift. But hey, last week I had somebody text me and say, hey, we need to roll agriculture into industry. If it ever goes this way, I could see how, we've talked about it before on the show as far as, maybe environment really dictating a lot of the direction here on some of the production techniques and things like that, and some of the programming, the BRM, it's worked its way in there. But it's more likely like a 2 to 3 way split. Like think about some of the agricultural trade issues that are already handled by the Minister of International Trade. So I wonder what the reaction would be. And now we have seen ag shared, like we've seen in some provinces. We have agriculture and fisheries. We've seen in Alberta where it was agriculture and forestry. So it does get split, which in some ways is almost like a shedding into. Let me know what you think. Could you ever see this happening? Could you see where there's no more Minister of Agriculture and Agri-Food? It would be, that'd be a big change, historically speaking. There's a lot of legacy involved there. Send me an email, shaney@realagriculture.com. And thanks for that email, Brian. Really do appreciate it. Let's take a break. When we come back, we're going to talk to Chip Flory, host of Agri Talk, right after this.
When it comes to the productivity and efficiency of your operation, every decision counts. One of those decisions is how you fuel your equipment. You need to be sure that it will run efficiently and without unnecessary downtime. Count on Co-op and your local Co-op fuel team to keep your equipment running smoothly with seasonally blended high-quality fuels and premium lubricants with guaranteed performance. We are Western Canadian. We are fueling harvest. We are Co-op.
The Pulse School on realagriculture.com has everything you need to get your crop off to a great start and a strong finish. Whether you're growing chickpeas, fava beans, lentils, or peas, you'll get all the latest and best agronomic information at pulseschool.com. A library of top-notch agronomy videos from industry experts available on demand at your fingertips. Visit the Pulse School, brought to you by BASF on realagriculture.com.
This year might bankrupt us. If I lose the farm, I'm letting down generations of my family. Why am I the only one who can't handle it? Maybe the farm would be better off without me. Hello?
Hey, I was just thinking about you and thought I'd say hi. I know it's been a hard season, and I wanted to see how you're holding up.
We might feel alone, but we're all in this together. Visit domore.ag for mental health supports tailored for the agriculture community.
I definitely find the daily movements in the ag commodity markets to be quite fascinating. A very challenging time trying to understand the ebbs and the flows, the S&D, the momentum in either direction, what the funds, where their headspace is at, what's the weather doing, what the heck is Putin thinking? All of that comes together and decides on which way this market's moving on a daily, weekly, and monthly basis. And so this is a tough time. This is where we can't ignore the markets and just try to focus on putting the crop in the bin. We got to be paying attention here to this. This is where the opportunity may be, is right now. You got a window, right? It's just like when you're at bat. It's just like in baseball. Major League Baseball hitters will talk about, you get one pitch at bat. Maybe you get, one little window in a growing season to really do a good job in your marketing. And if you wait till post-harvest, you maybe have missed the entire window. So, yeah, there's something we're going to stay on top of. Imitator stabilizer products, they claim dual protection, but do they actually deliver? Defend your UAN from nitrogen loss with Tribune Nitrogen Stabilizer from Koch Agronomic Services, offering superior above and below ground protection. See how others stack up at defendyourn.ca. That is Tribune Nitrogen Stabilizer from Koch Agronomic Services, defendyourn.ca. Joined right now by the host of Agri Talk. It is Chip Flory. Chip, how are you doing today?
Good, Haney. How you doing, man?
Hey, I'm doing pretty good. A little bit better than the markets yesterday. I gotta say, I guess, give me quickly the why. What the heck was yesterday? Because on the weekend, all I heard about is limit up Monday because of what's going on in Russia, Ukraine, and we were down big time.
Yeah, absolutely. I think the weather forecast took some yield risk out. That's the bottom line. It didn't show us that in the crop progress report, and the crop condition estimates had both corn and soybeans rated good to excellent, down 2 points. But the weather forecast has got some cooler temperatures. It's got the opportunity for some above normal rain in the forecast. And excuse me, when you combine those two things, lack of heat stress, and give the crop a drink in August, the market is going to reflect it. And boy, did it ever reflect it yesterday. That's for sure.
Did the size of, because we've seen this kind of situation before, but did the size of the snapback kind of take you a little bit off guard?
Yeah. Yeah, absolutely. I certainly didn't expect an end of July price action like we saw there. That's the other thing that we should mention, Sean, is that we did wrap up another month, and we did wrap up another very important month for the grain trading world. And it may have just been that the managed money decided that it was time to get away from the long side of the market. Even if in whole, they may have been neutral to a little bit flat in the market, anybody that was holding a long position on the spec side of the market may have just decided it was time to get out at the end of July. And without a trigger to move some of that managed money to the long side, to the buy side of the market, it created that vacuum to the downside that we saw yesterday. So I think the calendar, I think fund positioning, the forecast, and the lack of a major headline out of Ukraine, I think they all combined to have that kind of an impact on the market yesterday.
Yeah, those headlines definitely having an influence, and there's the headline, and then there's the body of the story, and that's the piece that I think some people are sort of losing attachment to sometimes. Is trying to understand if there's a missile that hits some sort of bridge or port, trying to understand, okay, does that actually have an effect on grain exports, or is that a port that's completely used for something else? That's been sort of a bit of a challenge, I think, for everybody, whether they're an expert on trading or they're just an amateur like myself.
Yeah. And there were some export numbers coming out of Ukraine yesterday that I think also had an impact with the amount of grain that was exported from Ukraine. It was over 2 million metric tons, which was up from 1.6 million metric tons a year ago. So that increase, even with half of the month operating without the grain deal and some attacks on those alternative routes, they were still able to export more than 2 million tons. Is that enough? No. Is it more than what the market expected? I think so.
So how would you describe kind of the sentiment right now? Every afternoon on AgriTalk PM, you interview a market analyst, somebody, and again, it could be livestock, it could be grains. Yep. From the grain side of the equation, how would you sum up kind of the messaging over the last 2, 3, 4 weeks? Is it still kind of a little bit of sell the rally mentality, or what are people telling you?
Dude, it's been all over the place. Most are of the opinion that the rally that we've seen is a rally that needs to be sold because it is a supply side rally, and supply side rallies don't last. There are others that have said, listen, we're just getting a hint of the potential that the grain markets have got, because look at how the dominoes are starting to fall on the supply side of the market. We still don't have 177.5 bushel per acre corn, 52 bushel per acre beans in the bin. We've got issues that we need to focus on the supply side. It all comes down to USDA is off by 500 million bushels on corn carry and off by 100 million bushels on beans. Now, I think the odds that USDA is off by 100 million bushels on bean carryover, I think that's probably right. I can't say that the corn number is off by 500 million bushels. I'm leaning down because I'm leaning down from 177.5. But I don't know. I'm having a hard time finding that new crop corn demand. Bean demand is showing up almost on a daily basis right now. New crop bean demand. And I never rule it out. If you've got China, unknown destinations, Mexico deciding that something north of 1350 in new crop beans is worth buying, I'm not going to argue with them. That's a solid indication to me that there is value in the market at 1350 plus. But on the corn side of things, I haven't seen. I haven't seen the demand to indicate that importers see a lot of value in new crop in 2023 crop corn with a $5 handle. They want to see a $4 handle. And it's not that long ago that we were at 481. I would guess that we're going to be back down there pretty quick.
Yeah, and what is that really the spark that buyers will need on corn, or is there the global economic situation? Like, what's kind of the overhang there?
No, it's going to be demand. I don't think there's any question about it. You can have a short crop, but it really doesn't matter if nobody's stepping up to buy what you do have. And right now, nobody is stepping up to buy what we will have on this 23 crop corn. The Safrinha corn crop, Haney, it is a real deal. And I think for the first time, we are getting a real understanding of the impact that Brazilian corn production is going to have on global trade. I mean, we're not getting near enough corn out of Ukraine, and Brazil has basically replaced it.
We've just backfilled.
Yeah. It's just the impact of this year's. How do I say it? The impact of the Brazilian crop on this year's global corn movement is something like we've never seen before. It's turning the market, turning the industry kind of on its head.
Now, in a couple of weeks, you're about to go out and see a lot of acres across the Midwest for the Pro Farmer Crop Tour. What are you most looking forward to finding out? Of course, I can't ask you what the yield's going to be because you haven't entered the fields yet, but what are you looking forward to finding out?
Yeah, it's kind of the same answer every year, Sean, and that is just let the discovery process happen. As the numbers start to come in on Crop Tour, and I'll be working some with the data again this year. But as the numbers start to come in, you start to see that discovery happen. You start to gain a greater understanding of the stress areas where the crop is really good, of some movement in acres and so on. It's just the discovery process. When we started doing it 31 years ago, it was, I considered it investigative reporting, and we got some guys to come along and do it with us. And I still look at it that way. I just let it, you gotta look at the numbers. You got to trust the numbers, and you got to let it be the discovery process that it is.
Yeah. Will you get an idea, do you think, on whether that 4 million acre reduction in beans is real?
Yeah. We always get comments on acres. And it'll be anecdotal. It won't be hard numbers. Mm-hmm. But we'll have, if we lost that many bean acres in that area, in that Northwest production area, we'll see it on day one. Because we'll hear comments like, I was going to stop at every 12 miles, but I had to stretch it out to 14 because I couldn't find a bean field. We'll see. We'll hear some comments or something like that if we lost all those acres.
Yeah, I think it's still the big if. Anecdotally, again, you talk to growers like, I don't know, I look around my area and I just don't see it. Like you don't really see the shift. But hey, it's 4 million acres and across upwards, between 80 and 90 million. It's right. To just look at your window and like, oh yeah, I believe it. Like it's a big geography.
Yeah, that's exactly right. So, but we'll aggregate some of those comments. And, the other thing is, don't forget what we're going to be getting before we get out on crop tour, and that's the certified acres from FSA. And that first look at the certified acreage data is going to give us a really good idea of whether or not we did lose 4 million acres of beans. Haney, the people that put the effort into the analysis on that initial drop of certified acreage data, in the past couple of years, they do a phenomenal job of analysis on that initial drop of data. It's become very important to the market because, like I said, the guys that know how to put the analysis on that initial drop of data are really good at what they are doing on it.
We have more coming up with Chip Flory, host of Agri Talk. But first, a quick break. You're listening to Real Ag Radio, Rural Radio 147.
Does your N stabilizer contain an active ingredient load high enough to be agronomically effective? If not, it could be costing you time and money. If you're putting down a nitrogen stabilizer, put your trust in Koch Agronomic Services. Solutions like Super U, Tribune, and Anvil. Each delivers high active ingredient concentrations that low-rate products just can't match. Compare how imitator products stack up to agronomically effective solutions at defendyourn.ca.
As you head out into the field this season, the Corn School's got you covered. Everything from tillage discussions, weed control info, field trial results, yield strategies, and more. The Corn School on realagriculture.com has the information and advice you need to help you succeed. Brought to you by Pride Seeds and BASF. Corn School episodes are available at cornschool.com, from realagriculture.com, or as a podcast from your favorite streaming service. Download the latest episode today.
Hi, I'm Bernard Tobin, host of the Soybean School on realagriculture.com. Throughout the year on the Soybean School, we'll bring you timely agronomic video content from planting to harvest, from the latest agronomic research to the latest in production technology. Check out our massive video library on YouTube, realagriculture.com, or download the audio podcast versions wherever you get your podcasts. The Soybean School is brought to you by Pride Seeds, BASF, and Syngenta Canada.
Talking markets today here on Real Ag Radio. We're joined by Chip Flory, host of Agri Talk. I just want to jump back to some of the downside risk here. And when we're talking about this weather market, I think we have an idea on the bullish side where the top is. And not to say we're even going back to that, but we've seen a huge run up in the past 3 years of where the market showed where it could go. What's the downside risk here right now? You mentioned we weren't too long ago at 480 in corn. Where do you see is if this weather market does totally pull the rug out, what does this look like?
4.25 on D's. 1170 on November beans. If it's better than 52. If it's not better than 52, I think this a 300 million bushel carry and 1250 price makes a lot of sense to me. Now, if we take 150 million bushels off of the supply side of the beans, just take 2 bushels off the national average yield, $14 beans all of a sudden make a lot of sense. We are about to get a really good handle on what the new crop bean market is going to look like going forward. I don't think we're quite there on corn. And the reason that I say that is because there's too many demand side issues to get answers to really figure out if carryover is 1.8 equals X on price. Because 1.8, because the supply side shrunk, is different than 1.8 because we had a big crop, but the demand increased to bring our carry down to 1.8. You see what I mean?
Oh yeah, absolutely.
So I think we need more answers on the demand side of corn before we can get it really figured out. But dude, a 177.5 on the national average corn yield with a 1.8 and the demand picture the way that it is right now, we got to go find some more demand, which is just a nice way of saying we've got to see some lower prices.
Yeah, I heard last week where somebody said, even if we're at 172, I'm not, and I was sort of taken back like that. That tells you right there what people think about some of the corn demand right now.
Right. Yeah. And it's comments like that, yeah, they are eye-opening comments. And I'm going to bring it back to the Brazilian corn supply, just changing the dynamics of the global market and hitting home in northeast Iowa and hitting home in eastern Nebraska. And the other thing that we need to watch going forward, had a conversation with Mark Hobrock from the Andersons yesterday afternoon. And he likes bean basis because we know enough about demand. We know enough that 300 million bushels with the crush capacity that will be coming online, it's hard to get negative bean basis. But when we think about corn, man, oh man, once the bins get full and the bushels that have no space on farm start coming to town, that corn basis could get ugly for the first time in 3 years?
Yeah. Yeah, that's about right. Yeah.
We could have corn basis get ugly on us.
Lots to look out for, and happy marketing, everybody. As we get into, which I can't believe is already August 1st. Hey, Chip, thanks so much for joining us. Really appreciate it.
You bet, Sean. Thank you, buddy.
I asked Chip there about, what is the potential for the downside when it comes to corn? And he said he did mention 425. So just to put it in perspective, we haven't been at 425 on Dees corn since going back to like the end of October of 2020. Halloween 2020. That's about where the last time we were at 425. So, we're trading somewhere around, 508, 510 right now in Dees 23 corn. So that's knocking not quite a full dollar off the current market, but need to take all these things in consideration. I like to hit this isn't a perfect science, right? So, did we think that we were going to have an 8 handle on Dees corn when we were there going back to, early 22? No, of course not. No, we didn't. So, none of these things are perfect, but having an understanding of the upside and the downside risk and what drives us in either of those directions, at least from the variables as presented at this point in time, is a big part of that, developing that marketing strategy and your what if analysis as you try to work through some of these issues for sure. Let's take a break. When we come back, we are going to hear from David Coletto of Abacus Data. We're going to talk about what's exactly going on with the mindset of union membership relative to what's happening with union leadership. We're seeing a lot about strikes and labor stoppages. Is this kind of the norm now? And what's driving it? Because it's impacting our industry. You're listening to Real Ag Radio, Rural Radio 147, Sirius XM.
Did you know that Pioneer now has a full lineup of Enlist E3 soybeans? Take a look at Pioneer brand Enlist E3 soybeans for the highest yield potential and for the best agronomic package and herbicide trait options. From the lab to the field, Pioneer brand Enlist E3 soybeans are the best in beans, period. Ask your local Pioneer representative about Enlist E3 beans.
Canola is more than just a pretty face in the prairie landscape. It's a big business, both here and around the world, that requires you to be informed and up to date on everything it takes to grow a successful crop. The Canola School on realagriculture.com has an expert library of video resources covering markets, agronomy, and more to help you grow a healthy and profitable canola crop. Visit canolaschool.com today. Brought to you by BASF Canada and Invigor Hybrid Canola.
Now, welcome back to Real Ag Radio. Power through harvest with Co-op fuels and lubricants made for the longest days and the biggest equipment. Performance you can rely on. Make sure you go to fuel.crs to find out more. That is Co-op Fuels. I'm joined right now by the CEO of Abacus Data. It is David Coletto. David, welcome.
Good to see you, Sean. Thanks for having me.
Good to see you too. Okay, let's talk about what you're seeing in some of your research right now. What's happening with unions? We're coming out of the pandemic. We're sure hearing about a lot of labor unrest, strike, job action, trying to find some resolution. Is there something at work here that's increasing the amount of sort of strikes and walkaways than we've seen typically?
Yeah, I think there's a number of factors that have kind of come together to create a perfect storm that's created, what does feel like, and I think is more labor unrest and what I see as a divide between what, the union leaders and negotiators say is a good deal and what their members are willing to accept. And the ongoing conflict at the BC port is a perfect example of that. And I think those factors relate to a few things. One is there's the overwhelming impact of sort of the rise in cost of living, right? So you've got workers across the country who have seen their costs go up, the cost of housing, cost of everything, food, and are expecting their wages to match that. So you've got, I've done lots of research with both private and public sector unions that signal, some pretty high expectations and for the kinds of wage increases they'd like to see in the first year and then in multiple years in a contract. So that is sort of the underpinning of the current context. But then you add in other more recent variables that are related to the pandemic. I think, particularly for workers who are unable to spend any time working from home or working remotely is that's added a new dimension that wasn't there before the pandemic. This idea that, I got to show up every day. I should get a premium for having to do that because I see lots of other people who get that luxury of being able to work from home or work wherever they want, 2-3 days a week. So that's added to, the differentiation in the types of work and workers. The pandemic, exacerbated an already clear labor shortage that we've seen in Canada. Even today, there's still, I think, close to 700,000 job vacancies. It's down over the last few months, but that empowers workers to know that they've got leverage, right? They're needed, they're essential, and they're going to, therefore, it's basic supply and demand. They're going to ask for more money as a result of it. And then add one more layer to that. And if you think about people who work in grocery stores or on the front lines at ports or, on railways or anything that's been kind of front line workers, think healthcare as well, throughout, the 2.5 years of the pandemic, they had been told repeatedly how important they are, how essential they are, how much we needed them and appreciate the work that they did. Well, now they're coming back and saying, okay, well, show me how much you love me. Show me how much I'm valued. And so that's all part of it. So those are more recent factors. You add one more, which is something I'm interested in, is the generational change that we're seeing within the broader workplace, where we're seeing, 4 or 5 different generations operating in a workplace and within a union. Expectations, concerns about, do I follow my union leaders' cues, or do I stand up and demand more, is very much a generational thing. So we're seeing younger generations being more bullish, being more demanding, and pushing the bounds where perhaps 30, 40 years ago, unions, I'm hypothesizing here, would much more easily fall into line and listen to the leaders and trust them. That trust isn't as strong in some of the unions I've worked with.
Yeah, that's interesting because I know with the WestJet pilot strike that was going to happen, I had talked to a friend of mine who's a WestJet pilot, and he had said, I don't know, I think his comment was, I think we should just accept the deal. But I'll tell you what, there's a young group of pilots that, boy, they've got a really big ask on what they're looking for. And I just don't think it's reality. So that's like one anecdote that really ties very much into the fabric of what you just said.
Yeah, and I think that's a perfect example. And it's added to that. When you look at pilots, for example, let's use that example. A lot of them are looking down to what pilots are making in the United States, which is substantially more than in Canada, and saying, well, why aren't we making at least close to the same amount or getting the same kind of raise? And, when you think about, again, thinking through the lens of a 30-year-old, right? Who, if you're a pilot or any career, you're probably at the lower pay scale relative to your peers who are older than you. That's normal. But you have all of these pressures, whether it's, increased housing costs, whether it's the pressure of if you want to have a family and you want to save for retirement, and added to that, and this came out in the port strike, is a deep unease about job security, about the role that automation is going to play. Yep. So if you're 60 and you're at the tail end of your career, you're far less worried about job security than if you're 30. And so all of those internal psychological factors, plus a different lens that those younger generations brings, I think has created more friction within a union. So the membership's more divided, and that spills out into these public fights where, you've got a deal at the table and the members reject it when they have their direct say.
Okay. So, and artificial intelligence and autonomy, that was the other one as you were adding, issues to it. You look at the writer's strike. It's a big part of that. The port worker strike, it was also an issue there. So it's not just creative jobs, but also, blue collar sort of jobs as well. With sort of the attitude differences amongst the generations in terms of how they sit within the union, where does that lead? Or from a trying to hold the union together standpoint with such a wide variety of opinion, and maybe a little bit more of I don't want to say militant, but a little bit more like, hey, we got to fight for this, and no matter what the consequences are, we need to get this across the line. What does that mean? I think union leadership.
Yeah, I think militant's a good word. I don't necessarily use it in a negative way. It's not like they're going to get violent or anything, but they're much more aggressive, more determined, I would say, to get what they want. And I think that the result is one, if you're a union leader, if you're somebody negotiating on behalf of your union, you just can't assume what your members want. I'm obviously biased in this. I'm a researcher. I spend a lot of time with a number of unions trying to understand not just what their members want. Right. It's one thing to say, okay, how much raise do you need, or what benefits do you want to see improved, or how can we, make your job more secure? But it's also understanding the why. Like, what are the emotional drivers that are causing somebody to say, look, I'm willing to go on strike. I'm willing to actually forego my pay for a few days, a few weeks, maybe months, if it means I've got long-term security, if it means I'm getting the wages I believe I deserve. Now, sometimes, and in all cases, whether you're negotiating with your employees in a non-unionized environment or a unionized one, expectations and differences between expectations and reality is something we've always had to deal with. But I think it's this unique situation where you've got all of this change happening in the workplace, in the labor market. You've got this incredible pressure caused by the cost of living. I'm going to call it crisis right now. That's creating so much friction, and you've got a younger generation who sees their future really uncertain, right? And I think, reiterating the importance of sort of technological change, the AI, the automation, we shouldn't underscore that, right? Those younger generations are far more aware that it's existing. And you mentioned the writer strike in the US. It's a perfect example. Just log into ChatGPT and ask it to write a screenplay for you on, whatever, give it all the parameters. It's pretty good, right? So you've got to be worried about that. If you're in that and you're creative and that's your profession. And I think all of that is bubbling up to create the kind of conflict that we generally didn't see previously for the last 10 years.
And is there an element here of general union membership pushing back against whether it's corporate profits or executive suite salaries? Is that a component of this too? Like, hey, as the general worker, we want a bigger percentage of the revenue pie?
Yeah, I think it's a big factor, right? And it's particularly true for publicly traded companies where all of its profit, all of its executive compensation is made public, right?
So you've got,
it's in the open. So you can't, you can't kind of downplay the profitability of your company when every quarter you're putting out your latest numbers, right? So whether you're an airline or a railway, or a grocer, for example, right? Metro, the number of Metro stores are closed because a number of union locals are on strike in around Toronto. That's a perfect example. So there's a sense of inequality. There's a sense of, hey, Mr. CEO, you're getting a 20% raise. You've got and plus you're making like 30 times more than I do, or sometimes 100 times more than I do. All I'm asking for is, it sounds like a big 20% raise, but it's really just a few $1,000s more. And so logically in people's minds, it's about pushing back on that, right? And just from a consumer perspective, we're going to release some new data this week. When we ask people, what do you think are the causes of inflation? Greedflation, the idea that companies are charging more for their products or services to make more profit. More people think that's a big factor than anything else, right? And so there is this general sense that corporations have done really well. And for the last 10, 20 years, wages haven't really gone up that much. And so when you have this sense of inequality, it drives that militancy, that desire to do it. And in a unionized environment, it's one of the few places where those workers can actually collectively, make a difference and disrupt, whether it's an economy, whether it's a company's profitability, to leverage that strength for more.
But in the greedflation example, like the House Ag Committee did a study on this and kind of came up with snake eyes in terms of that was actually happening, at least from a food perspective. So there's what people think, and then there's the reality. I guess in some cases, as the snowball gets building, it's what people think.
It's all like I always say I live in the world of perception, not reality, Sean. Like if I think something's happening, then it's happening, whether it is or not. And so, it's hard to push back on that perception, particularly when you continue to see, record profits being made. Now, those companies are in many cases earning those profits, are finding ways to be more efficient, but there's still this perception that, the price of certain food products, why are they going up 20%? Well, instinctively people understand supply chain challenges, the price of fuel, the war in Europe and in Ukraine are all factors in that. But there's still this deep distrust of corporate Canada, corporate America, that sort of embeds that. And that plays itself out also into how workers respond, right? There's a lack of trust, between that employee and that employer that further aggravates them and gets them in a position where they're willing to reject something that might be a good deal, but they just don't think is good enough.
But a vicious cycle, because if you're the CEO of an organization and you've got all this labor unrest continually, the first thing you're thinking when you go to your board meeting is, we can't stand this labor unrest. It's too disruptive to our business. It's impacting customers. It's impacting earnings. It's impacting the stock price. We need more autonomy. That we don't need to worry about all this. And so it just sort of builds on itself. There's a snowball building that way too. So that's something that I think probably unions need to keep in mind. And I'm sure, leadership has that in mind, but the general worker needs to keep that in mind too, don't they?
Yeah. It's this weird, like I always, when I do research, I'm always trying to understand like the psyche, right? Like there's this weird dynamic when you're in a union, because oftentimes that union is in constant conflict with your employer, right? But most people want to like where they work. They want to like they're proud. Most people are actually proud of where they work and what they do. And so in those really hostile kind of conflict filled environments, it has an effect. So it's finding a balance, I think, both from the employer's perspective and the union's perspective that signals to that individual worker that the union's doing its job, right? And the company's doing its job, and finding the middle point is really where you find agreement. I just think it's harder to do today than it's been in the past. And it might work itself out. And if the economy slows down, that's going to shift the power balance perhaps more towards the employer. But right now, I don't think I've seen a more empowered, bullish employee out there, whether they're unionized or not, than we see right now. And that's all of those factors that we described at the front end.
Totally makes sense. And with unemployment in Canada 5+%, the US at a crazy just above 3%, it's a pretty tight market. So that's employers definitely have to deal with this situation. I think you described it very well. Hey, David, thanks so much for joining us. Really appreciate it.
No problem, John. Thanks.
When we come back on Real Ag Radio, we'll get to the top ag news stories of the day. You're listening to Real Ag Radio.
Whether you're seeding, harvesting, or anything in between, the Wheat School on realagriculture.com has you covered. Timely agronomic information from industry experts available online anytime. Give your wheat crop a good start and a great finish with the Wheat School on realagriculture.com. Brought to you by C&M Seeds, Syngenta Canada, and the Alberta Wheat and Barley Commission.
Peter Johnson at Wheat Pete, realagriculture.com. I'm the host of The Word, and I love doing The Word. I love the questions. I love the challenges. I love having to apply agronomics to all over the globe and areas outside of my normal jurisdiction. Also, I love the feedback the most, where growers challenge me, tell me about their plot results, help me to learn. The Word, absolutely the best part of my day.
The top ag stories of the day is brought to you by Granubor from US Borax. Ask for it by name. Go to borax.com. Top of the news here today. Now, I think this is a big deal because this really impacts a lot of rural areas in Canada. And that is the fact that Xplore to offer faster rural satellite internet after Jupiter 3 launch. So Canadian rural internet provider Xplore Inc. plans to offer faster satellite internet to those in remote locations this fall following the launch of the Jupiter 3 satellite into space. The New Brunswick-based telecommunications company said the technology will provide a homegrown alternative to broadband internet service offered to rural Canadians through SpaceX's Starlink low Earth orbit satellites. Xplore President and Chief Commercial Officer Rizwan Jamal said his company's new broadband service will include speeds of 100 megabits per second, which is double the maximum speed it currently offers for satellite internet. Telecommunications consultant Mark Goldberg and said Xplore's new offering represents another tool to provide internet connectivity to households beyond the reach of fiber or fixed wireless. Let's be honest, this is high-speed broadband in rural areas is a big deal. It is needed. However we get there, the better. We can't lay fiber to all rural Canadians, but we can sure as heck launch some satellites in the air. And it sounds like Xplore is going to provide a little bit of competition to Starlink. The telecommunications consultant Mark Goldberg also said he estimated that 30% of rural Canadians do not have access to broadband service that meets the national service objective of 50 megabits per second for download speed, 10 megabits per second for uploads, and unlimited capacity. 30%. It's a big deal. That covers a big geography. The Reserve Bank of Australia decided to maintain its cash rate at 4.1%, going against the market expectation of a 25 basis point rate increase. This decision marks the second consecutive month the RBA has chosen to hold the rate steady. I believe we've also seen where Brazil is now cutting rates. So, yeah, another pause. So a pause in Australia. There's reasons to believe that we're going to start to see some pauses here again in North America. But it's all dependent on what the data says, is what most of these central banks will tell you. Now, we heard this in Chip's interview earlier. A lot of concern here about demand. And when it comes to ag commodities, that always leads back to China. China's economy continues to display signs of a downturn. The China General Manufacturing Purchasing Managers Index, that's a long name, the PMI, better known as, experienced a downturn coming in at 49.2, down from 50.5 in June. This figure falls below expectations of 50.3, marking the worst performance in the past 6 months. So what is happening in China and that economic situation plays a big role in the demand for agricultural commodities. It is not to be ignored. So we need to follow that one very closely. Drier than usual conditions across Western, Central, and Northern Europe are hitting crop yields from wheat to corn to barley, according to the European Union's Monitoring Agricultural Resources Unit. Europe's sunflower crop is now seen below the 5-year average due to a weaker outlook in Romania, while the spring barley crop is seen lower due to conditions in Scandinavia and the Baltic countries. Still, some areas got surplus rainfall that delayed harvesting and potentially reduced grain quality. Southern parts of the Iberian Peninsula and northern Italy experienced intense heat waves, which triggered a risk of heat-induced sterility for flowering summer crops, with potentially irreversible impacts on yield. And of course, with a lot of the concern what's happening in Ukraine and Russia, this is a part of the bullish argument that when we have a weather market, whether it be in North America or in parts of Europe, those added together really do add to the bullish. If you're building the bullish scenario, this is the kind of stuff that you are looking at in Indeed. Ford Motor Company restarted production of the F-150 electric Lightning pickup as price cuts stoke higher demand from buyers, I should say. Customers have had to wait on orders as Ford restocked vehicles after battery issues halted production at the plant this spring. The facility has restarted production in Dearborn, Michigan, and Ford is training an additional 1,200 workers to help increase supply, the company said on Tuesday. Ford has been slashing prices for the F-150 Lightning by as much as 17% to capture more share of the U.S. EV market and fend off competition from people or companies like Tesla and General Motors. Ford reiterated its plans to boost capacity to 150,000 trucks a year by the third quarter. I'm really interested in, as those EV trucks are rolled out, Tesla and GM and Ford, what the uptake is in rural communities. My hunch is not really good. We're going to see a lot of those pickups in suburban more settings. That's going to be something to really, I think, kind of pay attention to. Maybe something Real Agri Studies should look at it in some future months in terms of the market research on that. I think the uptake will be quite limited, but maybe you would tell me different. Would you buy an EV truck? Would you be interested in the Ford Lightning? It's your Ford F-150, but it just got a battery and not a fuel tank. To me, having the access to both, like where I have a motor, but where I need to, I can just flip it to EV. I think that would be like really better, like a hybrid sort of style. You could do either. I think that would make sense. I just don't see out in the ranch, middle of Colorado or Saskatchewan, people running EVs for distance being a big part of it, cold weather, stuff like that. So let me know what you think on that or anything we discussed here on the program. You can send me an email, shaney@realagriculture.com. You can also find us across all the different social media platforms. There's 1,000 of them now, and on all of them, we're Real Agriculture. Or you can call the Real Ag feedback line. And of course, that number is 855-776-6147. You dial that number, you press the number 3, and you leave me a message. I would like your perspectives. I want to hear what you think. Did you hear is there anything that you heard from David Coletto on the union discussion, the distrust between union membership and the union leadership? How do we rectify that? Because it impacts us in our industry. There is no doubt about that. Thanks, everybody, for getting real and getting connected with Real Ag Radio. And we'll, of course, chat again tomorrow. Cheers, everybody.